Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. It's the market update episode. We're going to be talking about a big news story of a multi-billion-pound pivot by a property firm and give you all the house price data and so much more. This is the episode where we give you all the info in a few short minutes.
Welcome to the Property Podcast. In case you don't know, we run a company that buys well over £100 million worth of property for our clients every year. You can find out about that at propertyhub.net/invest. And to do that, we need to keep up with what's going on in the market, distill down all the big stories with some behind the scenes insight for you every single month. And there are some big stories this month, so make sure you stick around.
The biggest news story I'm most excited about, Rob, isn't even out yet. Well, it's technically not a news story, but it is in a newspaper. On top of our weekly column with the Sunday Times, we have an article. They've asked us to write a little bit more, which is very exciting. And the wonderful news is everybody can access it. Every single podcast listener can access that article. So we can't wait to share it with everyone.
Yep, it is a no paywall weekend over on the Sunday Times. They only do it a couple of times each year. And what luck that the week they're doing that is the week that we're going to have a page where we're talking about exactly how to invest in property in 2025. We're even talking about some of our favourite locations in there. We mentioned places that we haven't talked about on the podcast this year. So you can head over to the Sunday Times website this weekend to see that. But you're busy, you might forget. I know it's exciting, but we've all got things going on. So if you're signed up to our free newsletter, Property Pulse, we will send you a reminder on Sunday so you can go check it out. And if you're not yet signed up to Property Pulse, what better time to put that right? You can do that for free at propertyhub.net/pulse.
Now, believe it or not, there is lots of action happening beyond our work in the Sunday Times. Let's move over to the Financial Times. This is a big piece of news, Rob, that's not really been covered anywhere. Commercial landlord, Landsec, is pivoting to residential property. Landsec, if you don't know, is a FTSE 100 company. It's an absolutely gigantic organisation that have billions of pounds worth of property in their portfolio, and they are moving to residential property away from commercial. They're planning to sell £2 billion worth of office buildings, which is their main bread and butter, and scale back office developments over the next 5 years and begin that pivot towards residential. They want to have about a third exposure of their portfolio to residential, which, when we're talking about the numbers that we are talking about here, is huge. Rob, the numbers are massive and the company is massive, but I think the real story here is that shift from one asset class within property to another, or at least the diversification, you could say. If we're being fair, they're diversifying. They are staying in commercial, but making a huge pivot with their portfolio to diversify into residential. What's your initial reaction to this? What do you make of it? What's your read into this story?
I think this is massive. And I'm really surprised that it hasn't been picked up anywhere else. The numbers are big, but it's not massive because it's going to move the market, bring on loads of extra supply that puts rent down. It's not going to push individual landlords out. But isn't this an amazing signal? Apparently, residential is such a disaster with all the regulation and the mortgages. The landlords are rushing for the exit. Buy-to-let is over. And yet, here is a FTSE-listed company wanting to take $2 billion out of offices and put it into residential. They're going from being pretty much a specialist, purely commercial operator into having a third of their stock in residential. That seems to me to be a huge vote of confidence for residential property. It's not quite the same thing. They're not in the same situation as an individual. Their access to finance is going to be different. Their ability to deal with red tape is different. They're going to be able to have economies of scale. But even so, it just seems remarkable to me, Rob, that you've got these two completely different movies playing at the same time. You've got the one which is like, oh, buy-to-let is terrible, it's all over, it doesn't work anymore, blah, blah, blah. And you've got this other one where company after company, pension fund after pension fund, bank after bank, and now Landsec are actually getting into residential in a big way.
You could also look at this and say, well, yes, it's absolutely a vote of confidence for residential property, but is it also a nervousness around the office market sector? Is it a nervousness around the long-term future of offices? Or that vote of confidence for residential property? I think it's probably going to be a mix of the two. This isn't something they would have decided over one quick meeting. Like, this would have been months and months in the work. You can imagine how much analysis has been done to justify this change in policy and strategy, because it is a massive change when we're talking about billions of pounds. So they've obviously justified to themselves that being in residential property is a good thing to do, and reducing their exposure to the office sector is probably a wise thing to do. It'd be interesting to see how this plays out over the coming months and years, to where they invest and what they invest in. And of course, we will update you on that if we see any big moves from Landsec. Talking of moves, Rob, house price movement, and it's a bit all over the place this month, which is unusual. Normally it's pretty close between Halifax and Nationwide, but they've got a difference of opinion this month in what house prices are doing.
Yeah, the big news this month is house prices are up and down. So they're down according to Halifax, up according to Nationwide. Asking prices according to Rightmove are up, but they're always up at this time of year and it's actually a bit below the average. But all of those are small moves. And importantly, I think they are small moves while transactions are happening. So it's not like you've got a market that's completely frozen. The market is functioning. People are buying and selling. Supply is up. Demand is up. It's just prices that are pretty flat. So I guess, Rob, you've just got a market that is in balance. It's not like everyone's getting excited and pushing prices up, but there's also no particular catalyst for them to fall either. So we're still in this sideways market that we've been in for a while now. You know what? I'm okay with that. It's a pretty good market to operate in.
It's a really good market to operate in. Deals can be done in this type of market. We are doing those deals for Property Hub Invest. In fact, we're in a position where we are turning down much more than we are accepting in terms of deal flow at the moment, because we're in that very lucky position. Because it feels like sentiment is not in a great place right now for property as a whole. But the numbers, Rob, don't reflect like it's doom and gloom. And you only have to look at Rightmove. Rightmove asking prices up again. So this is asking prices, not sold prices, but this is normally a good reflection about how people are feeling, up by 0.5% in February. And for those who've got good memories, you may remember us reporting in January it was up 1.7%. So for the year so far, we are over 2% increase in asking prices already. And that's just for the first 2 months of the year. So these numbers suggest there is a bit of optimism in the market. Maybe it isn't as bad as everyone is saying, but we are seeing deals. And that's something I like, Rob. I like this kind of cool market. Don't like massive booms. I don't like massive crashes, at least when you're trying to get deals done. You don't mind a boom when you're just sitting on your portfolio. But when you're trying to get deals done, this type of market is very nice. And we've talked many times about the power of leverage. So if you leverage in a relatively calm market, you can still do incredibly well. So it may not be sexy, Rob, but long may this cool, steady market continue.
Let's move on from prices of houses versus flats in particular, because this is another story in the FT that caught my eye. It's reporting that the price gap between houses and flats in the UK is at a 30-year high, according to Zoopla data. On average, houses are always more expensive than flats, always have been, always will be. But the relative difference between the two changes over time. And what we've seen over the last few years is that gap get wider and wider until the average house now costs 1.7 times the cost of the average flat. Rob, what I think is interesting about this is when you start to think about why that could be the case and what that means for prices in the future. So why have houses done better than flats? I can think of two very obvious reasons. One is COVID, race for space. Everyone wants to move out of the city, get somewhere with a garden, etc. The other is all the cladding issues. So some flats have been directly affected by cladding. Even those that haven't, there's still some nervousness around it, understandably. So I'd say those are probably the two factors that have pushed this ratio out. Both of those factors are now abating. I'm not saying that they've completely gone away, but I would say we've certainly seen the peak of both of those. So there's got to be a strong case for this ratio to revert back to its long-term norm. What I'm saying, Rob, is that there could be an opportunity in flats right now. They are undervalued compared to houses.
They are. And I'll make a prediction. And we're not afraid of making a prediction on a property podcast. In fact, we probably should learn and not make so many. But I'll make one. I expect that gap to narrow when we see a property boom. The reason why is I think more investors will come to the market now. The people invested in property right now are serious investors. They take their wealth seriously. They're not moved by big headlines. They listen to podcasts like this because they want the truth. They want to know what's happening. They see it as a long-term play. I think that when we get into a boom territory, more people will move into investment, some who probably shouldn't, and flats in particular will become more popular. What does that mean for you as an investor? Is now the time to go into apartments while they're historically undervalued? Or houses? Well, the answer is probably, if you're building a portfolio and not just invested in one, a mix. Diversification is the way to go forward. That's what Rob and I do. That's what we strongly recommend. You get that diversification in the type of property you invest in. And you can also expand that further by the area you invest in. I don't think we look at this data and go, right, we're all in on apartments now, or actually, let's keep riding the house trend. It's do both, and at different parts of the cycle, you will be rewarded.
Okay, let's mop up a couple of things that are going on in the world of politics. First, we've got to update you on the progress of the Renters' Rights Bill, or rather the lack of progress. It made its way to the Lords, but as of yet, they haven't had the committee stage in the Lords, various members submitting amendments. But those amendments don't necessarily have any weight. I think it's unlikely that any of them will come to anything. So I think we're on an inevitable path to having the bill passing, looking pretty much like it does now. It's just a matter of when. And of course, the longer it takes to make its way through Parliament, the longer it is until it actually becomes law, and then there's got to be an implementation date after that. So I'd say it's starting to look dubious about whether it will take effect this year at all, whereas at one point that was looking highly likely. But maybe by next month something will have happened, and of course we will update you on anything that happens. But also, Rob, it's a happy month for landlords in Scotland. There haven't been many happy months for landlords in Scotland in quite a while, but there is a temporary reprieve. As of the end of March, landlords in Scotland will be able to set rents however they want once again, for the first time since the government started meddling with all this stuff in 2022. However, it is a temporary reprieve because they are planning to bring in full-on permanent rent controls in a new bill that would take effect within the next couple of years. Rob, the news story that we dug out is talking about how this end to rent controls might spark new investment. That seems very unlikely to me, given the horizon and all the uncertainty that rents in Scotland suddenly spike, because everyone wants to get their rents up while they can.
Yep, I think that's almost a given, Rob. I think that's what will happen with rental prices. And will this spark a inward investment into the Scotland property market? Well, Glasgow and Edinburgh are fundamental hotspots, so much going for them. But the answer's still no. Who would do this investing in Scotland right now? And I know a lot of people in property. That kind of gives you an idea of the confidence that people have in that market. It's just so much easier to operate in England and Wales. I'm not saying it's easy, but it's easier. And the long-term outlook for both those places is much better. England in particular is much better than Scotland. So I just can't see it changing except that spike in rental prices, or asking prices at least. So I suppose that's the most positive report we've been able to give on Scotland, and it's that temporary reprieve, but I don't know if it's anything to start celebrating. But don't worry, Rob, we've got an electrifying end to this podcast. I've got so much energy to discuss this, but I'm worried I might trip over myself, so I will let you go first.
So you get to do the jokes and I have to do the big boring explanation. Is that how it works?
Well, there was lots of bullet points here, so I just thought I'd do the jokes.
So in case you hadn't picked up on it, we're about to talk about energy performance certificates. Woo! So there has been a consultation launched into changes to EPCs. And the document is 86 pages long. Basically, the gist is, as we expected, everywhere is going to need a grade C by 2028 for new tenancies, 2030 for existing tenancies. So that's a simple bit. Everywhere is going to need a C. They are changing EPCs at exactly the same time. And we don't know quite how they're changing them because that's another consultation which hasn't finished yet. So you need to get up to a C, but you don't quite know how to do it because they're changing how everything is measured. So it is all highly confusing. The good news is that if you've got a property that's got a grade C already, that will continue to be valid until your EPC expires, even if they bring in a new version. And the most important thing is that there are exemptions if you've got a really old listed building or something where damaging the fabric of the building is the only way that you'd be able to do it. And there's also exemptions if you've got somebody else like a freeholder or a tenant who just won't allow you to get it done. So we hear from a lot of people who've got a flat in a block and they're like, well, the only way that we can get this up is to change the heating for the entire block. So what am I going to do? Well, if that is the case, then as long as you've done everything that you can do, you'll be fine. So that is, believe it or not, the very, very quick version. There's lots of detail that I've missed out there. But the main point to take away from this is don't worry. Even though this is going to be in the news a lot and those deadlines sound very close, I wouldn't be rushing to do anything right now because everything's going to change anyway. And in practice, there are going to be exemptions. And I would be shocked if these dates end up being actually stuck to anyway, because there's absolutely no way in the world that everyone's going to be ready for these deadlines. So we will cover this more as this goes from being a consultation to being actual law that we can base decisions on. For now, I'd say the summary is watch and wait, pay some attention to what's going on, but don't stress out about it.
Well, Rob, I had to resist making more jokes there, but after that powerful message, I will leave it be. Okay. That is done for our news. But before you go, we've got Hub Extra. This is big. This is something that Rob and I are very excited to buy. We're both using, I don't think it's an overstatement to say we've been blown away by the capability of this tool. Yes, it's an AI tool. I'm not going to get bored of bringing you these tools because We want you, as our listeners, to be ahead of all this type of stuff because it can make a difference, a massive difference, not just in your property investment, but your life. And this week, Rob, we're talking about deep research.
So deep research is a new capability that is built into ChatGPT. It's also available in Perplexity, which we talked about in the past. If you just do what you'd normally do in ChatGPT, but hit the deep research button, like the name suggests, it goes away and does some deep research. So whereas normally you would make a query and it will come back to you within a second or two, it can take minutes. It sits there churning away. You can see the process it's going through. You can see all the different websites and links it's visiting to go and gather all this data. And then it puts it all together for you. And Rob, I said to you the other day, look, here's something I got it to do. We would have paid someone good money to do this in the past. They'd have gone away for a month, come back with this, and you've gone, yeah, this is good stuff. That's really useful. But it did it for free in about 3 minutes.
Yeah, and AI taking a few minutes on a subject is like a human taking weeks. Because if you think about your experience with AI currently, it pings back a response in a blink of an eye. So when it deep researches the internet for this information, it's spending, in AI terms, a phenomenal amount of time. And that's why it can be restricted on how many times a month you can use it. I know if you have the paid version of ChatGPT, you can only do it so many times a month. Grok have a version of Deep Research, although I've not used that. I've been more than impressed with the ChatGPT version. And you can apply it to your property investment strategy, to business. And I've recently applied it to a health thing as well, getting more information, it going through all the research papers to help me to understand the subject and making good recommendations too, I might add. And you can get this for £20 a month for the premium version of ChatGPT. The tools that we have access to are incredible. Do pay that money and start using it. I think the main thing people need to get over, Rob, or start to do is make this a habit, make AI a habit. Because if you just go into it every day to use it, whenever you have a task, think, can AI do this? And you'd be surprised at how often the answer is yes. There's stuff that we're experimenting with all the time. It's amazing. It's a very exciting time. If you're not excited, get stuck in because you will be.
Yeah, we're talking about it a lot because this is something big is happening here. And being early on it is like a superpower. So we will continue to bring you more AI and other things in Hub Extra. But for now, that is us done. We've brought you up to date with everything that's going on in property. Hope you enjoyed it. And remember, you can find us in the Sunday Times this weekend. No paywall. You can go and read our Sunday Times article. And if you want a reminder to do that, then you can sign up to Property Pulse. You can do that at propertyhub.net/pulse. Until then, enjoy the rest of your week. Bye-bye.
Bye-bye.